All right, let's dive into something really interesting today.
Okay.
We're going to unpack Mohnish Pabrai's latest portfolio filing.
Yeah.
And this is the one from Q4 2024.
Mm-hmm.
And
Pabrai Investments.
yeah, Pabrai Investments right off the bat.
Yes.
There's something kind of unusual about this one.
Yeah.
You've given us the filing here, and it's a little over $250 million he's managing.
Uh-huh.
But he's only invested in 3 companies.
Yeah, that's right. And
which is so weird.
even more surprising, all 3 are tied to the resources sector.
Oh, wow.
Specifically, a type of coal used in steel production.
Yeah.
It's called metallurgical coal.
Okay, so now we know Pabrai's reputation, right?
Yes.
He's all about finding these undervalued assets.
Right.
And he likes to hold for the long haul.
Mm-hmm.
So why is he going all in on coal now?
Well, that's what we're going to unpack today.
Yeah. Why coal? Why now?
Before we jump into the specifics, let's make sure we're all on the same page about metallurgical coal.
Yeah, what is that?
It's often called met coal for short.
Okay.
It's a high-grade type of coal, and it's essential for making steel.
Okay.
And it's distinct from thermal coal,
Yeah.
which is used for power generation.
Okay. So just so everybody knows, this is not the coal that is burned to generate electricity.
Exactly.
This is different.
Different type of coal.
Okay.
Different purpose.
Okay. So we've got Pabrai,
Yeah.
renowned value investor, going all in on met coal in a world that seems to be moving more and more towards renewable energy.
Yeah.
It's a pretty big statement, don't you think?
It certainly raises eyebrows.
Yeah.
You'd expect a value investor to be more diversified.
Right.
But Pabrai is known for his concentrated bets.
Yeah, he does like to go all in.
It's a high-risk, high-reward approach.
Yeah.
And he seems to have found a niche he believes in.
Okay, so let's start breaking this down a little bit.
Okay.
Let's break down his holdings.
Yes.
And let's start with the largest piece of his portfolio.
Okay.
This is Alpha Metallurgical Resources, or AMR.
That's right. AMR makes up a whopping 38.47% of Pabrai's portfolio.
Wow.
And what's interesting is he actually increased his stake this quarter.
Oh, wow.
By 1.57%.
So he's doubling down.
This signals continued confidence in the metallurgical coal market.
Yeah.
And more specifically in AMR's position in that market.
So even with everybody talking about moving away from fossil fuel,
Right.
he's doubling down on a company that produces this key ingredient for making steel.
Yeah, and this is where understanding the steel industry is crucial.
Okay.
Despite the push for greener alternatives, steel remains a fundamental material for construction, infrastructure, manufacturing.
It's everywhere.
As long as there's demand for steel,
yeah,
there will be demand for metallurgical coal.
So it sounds like he's kind of betting that this transition away from met coal won't happen as quickly as some people think.
Right.
And there's still value to be found in this industry that everyone else thinks is outdated.
Exactly, and that's classic Pabrai. Finding value where others aren't looking.
Yeah.
Now let's move on to the second holding.
Okay.
Warrior Met Coal, or HCC.
Okay, Warrior Met Coal.
This one's a real head-turner.
Yeah, because he supersized this one, right?
He did indeed.
Yeah.
His stake in HCC increased by a staggering 144.08% this quarter.
What?
Bringing it to 36.48% of his total portfolio.
Wow.
That's nearly equal to his position in AMR.
Wow, that's a big jump.
Yeah.
It's almost like he's saying, I really like what I see here.
Yes.
And I'm putting my money where my mouth is.
Precisely.
Okay.
Now, Warrior Met Coal specializes in high-quality metallurgical coal.
Okay.
They're known for producing a premium product
Okay.
that's in high demand from steelmakers worldwide.
Okay.
This focus on quality could be a key factor driving Pabrai's confidence in HCC.
So it's not just betting on met coal in general.
Right.
It's about finding the companies that are best positioned
Exactly.
within that market.
Yeah.
The ones who are delivering the product that's still going to be in high demand even as things change.
Absolutely.
Okay.
Now, the third holding Core Natural Resources, or CNR,
Okay.
this one saw a decrease this quarter.
Oh, really?
It's down by 22.80%.
Okay.
But even with that reduction,
Yeah.
it still represents a significant 25.04% of the portfolio.
So he didn't abandon it,
No.
but maybe he's shifting his focus to the other two.
That's a very astute observation.
Yeah.
Remember, he significantly increased his holdings in AMR and HCC?
Yeah.
So it's possible he's reallocating funds to capitalize on what he sees as more lucrative opportunities.
Yeah. And CNR is interesting because they're not just focused on coal.
That's right.
Like the other two.
They have a more diverse portfolio of resources, including oil, natural gas, and various minerals.
Yeah, they're not putting all their eggs in one basket.
Exactly.
Yeah.
So perhaps he's becoming even more laser-focused on this specific opportunity he sees within metallurgical coal.
Okay.
choosing to concentrate his investments
Mm-hmm.
in the companies that are solely dedicated to that niche.
So he wants those pure plays.
Yeah.
Yeah, okay, so we're starting to see this really interesting picture
Yes.
where he's betting big on met coal
Yes.
through these three companies.
And what's fascinating is he's not just passively investing.
Right.
He's actively managing his portfolio,
Right.
making adjustments based on his assessment of the market and the performance of these companies.
It's like he's playing chess,
Yeah.
you know?
Carefully planning his moves,
Yeah.
anticipating his opponent's strategies.
Trying to stay a couple steps ahead.
And we, as observers, are trying to decipher his game plan.
Yeah, we're trying to figure out
Understand his motivations, learn from his insights.
what he's thinking.
Exactly.
Yeah, so
Yep.
we've laid the groundwork.
Yes.
We've introduced the players. Now let's dig in a little deeper.
Yes.
Let's start with AMR.
Okay.
What can you tell us about their operations?
Okay.
And their financials?
All right.
And their position in the market?
That's where things get really interesting.
Okay.
Let's start by looking at AMR's recent performance
Right.
and see if we can glean any clues
Yeah.
as to why Pabrai is so bullish on this particular company.
All right, let's do that.
So AMR has actually been performing pretty well.
Okay.
Their revenue and earnings have been growing steadily,
Okay.
and they've been able to maintain a healthy profit margin,
Okay.
even with those fluctuating coal prices.
So they're not just surviving, they're doing well.
Right, they're thriving.
Yeah.
They've also been investing in their operations,
Okay.
upgrading equipment, expanding their production capacity.
Oh, wow.
This suggests they're anticipating that continued demand for
Right.
metallurgical coal,
Yeah.
and they're positioning themselves to capitalize on that demand.
So they're not just riding the wave, they're like actively paddling.
That's a good analogy.
Yeah.
Now remember, AMR is primarily focused on supplying that met coal to the steel industry in the U.S.,
Okay.
which is still a major consumer of steel,
Right.
despite that global shift towards greener alternatives.
So it's like a bet within a bet.
Yeah.
He's betting on met coal, and then he's betting on the company that's really tied to the U.S. steel market.
Exactly.
Yeah.
And the U.S. steel industry is going through its own transformation
Okay.
with a focus on more efficient production methods
Okay.
and a gradual shift towards electric arc furnaces,
Okay.
which can utilize recycled steel.
Okay, so that would mean they're using less met coal.
However, even with these changes, metallurgical coal remains a crucial component
Okay.
in the steelmaking process.
So it's all about understanding the nuances,
Right.
the little details that can make a big difference.
Exactly.
Okay, so let's move on to Warrior Met Coal.
Okay.
What's the story there?
Warrior Met Coal,
Yeah.
as we mentioned earlier, specializes in high-quality metallurgical coal.
Okay.
They operate in Alabama,
Okay.
which is known for producing some of the best met coal in the world.
So location plays a role here.
Absolutely.
Okay.
The quality of the coal deposit itself is a major factor in the final product.
Yeah.
Warrior Met Coal's mines are located in a region with exceptional coal reserves,
Oh, wow.
giving them a competitive advantage
Okay.
in terms of the quality and consistency of their product.
So it's like having a prime vineyard for wine.
Precisely.
But the terroir, the specific characteristics of the land, influences the quality of the final product.
Yeah, and just like a fine wine,
Yeah.
high-quality met coal commands a premium price in the market.
Oh, okay. Interesting.
Steelmakers are willing to pay more for that coal
Yeah.
that's going to produce that high-grade steel.
Makes sense. Now, remember how we talked about AMR investing in their operations?
Yes.
Well, Warrior Met Coal is doing the same.
Yes, they are.
They've been investing heavily in their mines,
Mm-hmm.
implementing advanced technologies
Yes.
to improve efficiency and safety,
Yes.
and increase their production capacity.
And this aligns perfectly with what we know about Pabrai's investment philosophy.
Yeah.
He looks for companies that are well-managed,
Right.
financially sound,
Mm-hmm.
and have a clear plan for growth.
Yeah. And Warrior Met Coal seems to tick all those boxes.
It does.
Okay, so we've covered the two companies where he's increased his stake.
Yes.
Now let's tackle the elephant in the room.
Okay.
Core natural resources.
Right.
Why would he reduce his position
Mm-hmm.
in a company that's still generating revenue
Yeah.
and seems to be in a solid position within the resource market?
That's where the real detective work comes in.
Okay.
Remember, CNR is a more diversified resource company.
Yeah, they're not putting all their eggs in the met coal basket.
Precisely.
Yeah.
And perhaps Pabrai sees this diversification as a disadvantage in
yeah.
the current market environment.
Okay.
Remember, he's laser focused on this specific opportunity
yeah.
he sees in metallurgical coal.
Yeah.
So CNR's broader exposure might be diluting their focus.
Okay.
preventing them from fully capitalizing on the met coal boom.
So he wants the pure plays.
Exactly.
Yeah.
Now, another factor to consider
Okay.
is the geographic location of CNR's operations.
Oh, okay.
They have a presence in various regions across the U.S.,
Okay.
but they're not as concentrated in the heart of the met coal producing region,
Okay.
like Warrior Met Coal.
So location matters not just for the quality of the coal, but also for like logistical reasons.
Absolutely.
Transportation costs, access to infrastructure.
Yeah, being close to the source of demand. In this
Yeah.
case, the steel mills in the southeastern U.S.
Yeah.
can give a company a competitive edge
Okay.
in terms of costs and delivery times.
So maybe he sees Warrior Met Coal's location in Alabama as a strategic advantage
Yeah,
that CNR doesn't have.
that's a very plausible explanation.
Okay.
And remember, we're talking about a highly competitive market.
Right.
Every little edge counts.
Yeah.
And Pabrai is known for that meticulous attention to detail.
Right.
He's not going to overlook any factor that could impact the long-term success of his investments.
It's like he's playing a game of inches.
Exactly.
You know, just looking for every possible advantage to make sure his bets pay off.
Now, one more thing to consider is that CNR has a more complex corporate structure
Okay.
than AMR or Warrior Met Coal.
Okay.
They've been involved in various mergers and acquisitions over the years, which
Yeah.
can sometimes create inefficiencies
Yeah.
and add layers of bureaucracy.
So maybe he prefers the simplicity and the agility of the other two companies.
That's a very astute observation.
Yeah.
Remember, value investing is about finding companies that are fundamentally sound,
Mm-hmm.
well-managed,
Yeah.
and have the potential to generate those strong returns over the long term.
Yeah, and maybe he sees AMR and Warrior Met Coal as better fitting that profile.
That's a very plausible conclusion.
Yeah.
Now remember, we're not privy to Pabrai's exact thought process,
Right.
but by analyzing his actions
Yeah.
and considering the context of the market, we can start to understand the rationale behind his investment decisions.
It's like we're putting together a puzzle,
Right.
piecing together the clues to form a coherent picture.
Exactly.
Okay, so we've dissected the three companies in his portfolio.
Yes.
We've explored their strengths and
The
weaknesses.
opportunities and challenges.
What's the overall takeaway for our listeners?
Well,
What can they learn from Pabrai's approach?
I think the key lesson here is the importance of independent thinking.
Okay.
Pabrai is clearly not afraid to go against the grain,
Mm-hmm.
to challenge conventional wisdom,
Yeah.
and to bet on industries that others might consider to be in decline.
He's not just following the crowd, he's forging his own path.
Exactly. And that's
Yeah.
a powerful lesson for any investor,
Yeah.
regardless of their experience level.
Yeah. Don't be afraid to think for yourself, do your own homework, and form your own opinions.
Exactly.
Yeah.
It's about having a thesis,
Yeah.
a well-reasoned argument for why you believe a particular investment will succeed.
And it's about putting your money where your mouth is.
Right, and being willing to back up that thesis with your own capital,
Yeah.
taking calculated risks
Yeah.
based on your assessment of the situation.
So while we might not all be able to replicate Pabrai's success,
Yeah.
we can certainly learn from his approach,
Yeah,
his discipline, his willingness to challenge the status quo.
absolutely.
Now let's take this one step further.
Okay.
What does this bet on metallurgical coal tell us about the assumptions we're making,
Yeah,
about the future of energy and resources?
that's a great question.
Yeah,
It's easy to get swept up in the headlines about the transition to renewable energy,
yeah.
but Pabrai's actions suggest that the story might be more nuanced.
Yeah, maybe we're too quick to write off these traditional resources like coal,
Right.
even as the world embraces these greener alternatives.
Exactly.
Or maybe he sees a future where both traditional and renewable energy sources coexist.
That's a fascinating possibility.
Yeah,
It challenges us to think beyond the simplistic narratives
yeah,
of good versus bad energy sources,
right.
and to consider that complex interplay of factors
Yeah.
that shape the global energy landscape.
It's a reminder that the future is rarely black and white,
Mm-hmm.
and opportunities often lie in those gray areas
Yes.
where conventional wisdom and emerging trends intersect.
And it's in those gray areas where investors like Pabrai often find the most compelling opportunities,
Yeah.
those hidden gems that others might overlook in their pursuit of the latest trends.
Okay, so we've covered a lot of ground today.
Yes, we have.
From the specifics of his portfolio
Right.
to the broader implications of his investment strategy.
Yeah.
But there's one more piece of the puzzle I think they need to address.
Okay.
And that's the steel industry itself.
Yes.
So Pabrai's bet on metallurgical coal is ultimately a bet on the continued demand for steel.
Right.
So let's dive into the steel industry a little bit
Okay.
and see what the future might hold for this essential material. Okay, so we know that Pabrai's betting big on metallurgical coal,
Yeah.
which is a key ingredient in steel production.
Mm-hmm.
But what's the outlook for the steel industry itself.
Right.
Is it really as reliant on met coal as he seems to think?
That's the million-dollar question.
Yeah.
The steel industry is facing a lot of pressure to reduce its carbon footprint.
Yeah.
There's a global push towards greener alternatives.
Yeah, it's not exactly known for being environmentally friendly.
Right. But here's where things get interesting.
Yeah.
While there's definitely a move towards more sustainable steel production methods,
Okay.
that transition's going to take time.
It's not like flipping a switch.
No.
You can't just shut down all the existing steel mills
Right.
and replace them with eco-friendly alternatives overnight.
Exactly. The infrastructure, the technology, the investment required to completely revamp the steel industry is massive.
It's a huge undertaking.
It's a gradual process.
Yeah.
And met coal is likely to remain a significant part of that equation for the foreseeable future.
So Pabrai might be betting on that transition period.
Yeah.
That window where demand for met coal remains strong.
Right.
Even as the industry is slowly shifting to greener alternatives.
That's a very astute observation.
Yeah.
He's essentially saying, I understand the long-term trends, but I also recognize that the reality on the ground is more complex.
Right.
Met coal isn't going away tomorrow.
Right.
And there's still money to be made in this market.
It's a contrarian view, but it's not unfounded.
No.
Okay, so let's talk about the demand side.
Okay.
Who's buying all this steel?
Right.
Is that demand going to keep growing?
Well, steel is a fundamental material for construction, infrastructure, manufacturing.
It's everywhere.
Pretty much anything that involves building or making things.
Buildings, bridges, cars, appliances, you name it.
Exactly. And as long as the global economy keeps growing, as populations increase, as urbanization continues, that demand for steel is likely to remain robust.
So even if some sectors reduce their reliance on steel, other sectors might pick up the slack.
Precisely.
Yeah.
Emerging markets in particular are expected to drive significant growth in steel demand in the coming years as these economies develop. They'll need massive amounts of steel for infrastructure projects, housing, industrial development.
So it's not just about developed economies maintaining their current level of consumption.
Right.
It's about new markets coming online and adding to that overall demand.
Exactly. And this global demand dynamic is probably a key factor in Pabrai's calculations. He's looking at the big picture, those macro trends that are shaping the steel industry. And he's betting that demand will outpace that transition to greener alternatives. At least for the next few years.
It's a bold bet, but it's grounded in a solid understanding of the market forces at play.
Right.
Now let's bring this all back to our listeners.
Okay.
What does all of this mean for the everyday investor who's trying to make sense of the market and make good decisions?
Well, I think there are a few key takeaways here. First, it's a reminder that investing is not just about following the latest trends or jumping on the bandwagon.
Don't just blindly follow the crowd or chase the hot stocks.
It's about doing your homework, understanding the fundamentals, and forming your own opinions based on your research and analysis.
Think for yourself. Be critical.
Exactly.
Be willing to challenge conventional wisdom.
Second, it's important to remember that the market is complex and constantly evolving.
It changes every day.
There are always multiple factors at play. It's rare for any single narrative to capture the full picture.
It's about seeing those nuances.
Right.
Recognizing that opportunities often lie in those spaces where different perspectives collide.
Precisely. And third, Pabrai's example highlights the importance of conviction. When you believe in something, when you've done your research and you're confident in your assessment, don't be afraid to make a bold move.
Yeah, but conviction should always be coupled with a healthy dose of caution.
Right.
Don't bet the farm on any single investment.
Don't go all in.
No matter how confident you are.
Diversification is still important, especially for the average investor.
Right.
Pabrai's concentrated approach is a high-risk, high-reward strategy that might not be suitable for everyone.
So as we wrap up this deep dive into Mohnish Pabrai's portfolio, we hope you gain some valuable insights into the world of investing.
The complexities of the market, the importance of independent thinking.
Remember, there's no one-size-fits-all approach to investing.
Right.
What works for one person might not work for another.
Exactly. The key is to find a strategy that aligns with your own goals, your risk tolerance, and time horizon.
And to constantly be learning.
Adapting
and refining your approach.
Right.
As you gain experience.
As you navigate this ever-changing market.
So keep exploring, keep learning.
Keep challenging yourself to think differently.
Who knows, maybe you'll uncover the next hidden gems that everyone else is overlooking.
Until next time.
Happy investing.